India started buying gold too after a long period of not doing anything at all. Why? Because she knows that the way the Shanghai Cooperation Organization is going and BRICS, gold is going to be the future. The days of fiat currencies are rapidly drawing to a close, so she's got to have gold. She's very Keynesian in her approach, but even she sees, it would be a bit silly for us not to have any gold under these circumstances. This is something that I think, Jay, is going to continue until the system breaks. When we see gold being just incredibly stable at $2,500, that just tells me that there's big money in there buying the dips, and it never goes further than maybe $10, $20 below the 2,500 level. There is a big buyer in there.
In a compelling analysis, Alasdair MacLeod, the head of research at Goldmoney and a prominent precious metals analyst, has outlined a dramatic vision for the future of global finance and the role of gold in it. According to MacLeod, the financial systems in Western countries are increasingly showing signs of collapse, while Eastern powers, particularly Russia and China, are emerging as significant global players. MacLeod's analysis suggests that the Western financial system is on the brink of a severe crisis, exacerbated by ongoing geopolitical tensions and economic instability. He predicts that this impending crisis could be the catalyst for a major shift in the global financial landscape. As Western institutions struggle, Russia, China, and their allies are strategically positioning themselves to transition from the current fiat-based financial system to one that is fully gold-backed. The idea of a return to a gold standard, while seemingly radical, is gaining traction among some analysts and policymakers. MacLeod argues that only a complete shift to a gold-backed system will effectively address the looming sovereign debt crisis and restore public confidence in governments. He posits that a partial gold-backed system, as some experts suggest, would not be sufficient to solve the deep-rooted problems facing the global financial system. Recent geopolitical developments further underscore this potential shift. Russia and China are actively expanding their influence and economic ties, particularly through initiatives like the BRICS Plus group, which includes numerous emerging economies. The strategic moves by these nations, including Russia's increased gold purchases and China's extensive infrastructure investments, are seen as preparations for a broader economic realignment. Now we present the clips of Alasdair MacLeod's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
One thing we do see is the People's Bank of China is selling dollars. People say that they're buying gold. No, they're not. They're selling dollars. You've got to get it the right way around. They're actually trying to reduce their dollars. So that is undoubtedly the first sign of this, if you like, the first real sign of it happening. But then we've got the BRICS summit in Kazan, I think it's called, in October, towards the end of October. And in that summit, there is said to be a debate about a new trade settlement currency. Everybody's got terribly excited because a couple of guys came up with this idea of a new currency called the unit, which is backed by blockchain and all the rest of it. Now, one of them is a Russian and the other is a Chinese guy. And you'd sort of think that, okay, there's a Russian and a Chinese expert. They've been appointed by the government to look at this. No, they haven't. One's a fund manager for Arkhangelsk investments or something in Russia. And the other is a fund manager in the Far East. So, and computer expert. So, he's got the blockchain, if you like it. It's not going to work. It's just absolutely crazy. And they quite clearly do not understand how credit works. It's, money doesn't circulate. By money, I mean gold. It doesn't circulate. But the point about it is that you have a standard which guarantees the value of a currency, of the credit and all the dependent credit. That is how a proper gold standard works. This idea that you can put together 40% gold and a whole range of other currencies which are purely fiat but value the thing on a day-to-day sort of gold equivalent. It's just a complete bloody nonsense. It's as simple as that. So this is a debate which I think will be increasingly highlighted in the next couple of months ahead of the BRICS summit. Whether something actually appears on the summit about this or not, I really don't know. My take on it is it's actually extremely easy to introduce a gold-backed, let's say, a gold substitute currency for trade settlement purposes. You could do it tomorrow. It really is not difficult. I think more importantly, Russia would benefit hugely from going on to a gold standard. I mean, her economy would need very little adjustment because government spending isn't all that high. Okay, it's been increased because of the war against NATO in the Ukraine, but it's still. I mean, their debt to GDP, in spite of all that spending, is still only 22%, and income tax in Russia, you're looking at a flat rate of 13 to 15%. What's not to like about that? Yet their interest rates, I mean, the reference rate for the Bank of Russia is 18%. The reason for this is that nobody has confidence in the currency. Who would want to buy rubles? Fiat rubles. I mean, I might like the numbers in the economy, but I don't think I'd want to buy fiat rubles. So you can see that the thing that is missing is the guarantee of the value of the ruble. If you can do that, then interest rates will decline, and you have an economy which doesn't demand huge, great consumer spending being financed by bank credit or whatever. It's basically an economy which can grow on production, and it's got all the characteristics of a really good 19th century economy. So that's the way they should go. And I think if Russia does it, then you'll find that the Saudis will do it quite quickly. So a gold standard, I think, is actually the answer, a proper gold standard. And the merit of it is that you could introduce a gold standard without having to have the agreement, unanimous agreement of the BRICS members. You just say to them, look, the facility is here if you want it. You don't have to agree to it. If you don't want it, don't take it. The reason they're not doing it, Jay, is that the moment they go on to a gold standard, a credible gold standard, they will destroy the fiat currency world, including, guess what, the dollar. And I don't think the Chinese in particular want to be associated with a deliberate act that destroys the dollar. They would rather protect themselves from a collapse in the dollar by whatever means, which obviously will involve going on to some sort of gold standard. But once it is completely obvious that they've got to protect themselves, and it's not their fault.
In July, China imported 45 tons of gold, marking a 24% decline from the previous month and a significant 58% drop year on year. After accounting for exports, net imports stood at 37 tons, the lowest monthly total since May 2022. This decline can be attributed to weakening demand, as local manufacturers and wholesalers have scaled back their expectations for gold consumption in the coming months. Additionally, China's official gold holdings remained unchanged at 2,264 tons by the end of August, the fourth consecutive month without any reported increase. The local gold price premium has also sharply declined, turning into discounts after mid-July. Gold makes up about 5% of China's foreign exchange reserves. As of 2024, China's reported gold purchases amounted to 29 tons, accumulated between January and April. Despite the recent import slump, China has been actively boosting domestic gold production and importing d'Or bars, partially refined gold for refining. According to analyst Alasdair MacLeod, this strategy has allowed China to increase its total gold holdings steadily. MacLeod estimates that China's combined state and private sector gold reserves could now range between 30,000 and 35,000 tons. Let's get back to the interview.
I say that as far as gold is concerned, China is like Hotel California. Once it goes in, you don't see it again.
Right.
I mean, I did an exercise trying to work out how much gold the Chinese had before 2002, when they then set up the Shanghai Gold Exchange and permitted their citizens to buy gold. In fact, they advertised and said, gold is good for you, or whatever the byline was. And the result is that since 2002, the citizens have acquired something like 27,000 tons delivered through the SGE. Now, that's a gross figure because what I haven't seen is details, if you like, of scrap going back into the SGE's vaulting system. But I think, we're probably looking well over 25,000 tons, I should say, are in private sector hands. Now, the reason that they started to permit the public, if you like, the Chinese citizens, to buy gold in 2002 was it was quite clear that the state had acquired enough of a stake for it to be satisfied, and therefore not to be acting in competition with its own citizens in acquiring gold. And you need to go back to 1983 when the regulations were put in place for the People's Bank of China, was appointed then to acquire the nation's gold and manage the nation's gold reserves and also silver. That was 1983. Now, bearing in mind that from that time going on to 2002, there was a massive bear market in gold, which took it down from, I mean, we're talking about something like $600. I mean, it had been higher in 1981, but something like $600, $500 down to half that. A lot of gold was sold out from the West. And not only that, but there was a lot of gold leasing going on, where gold was disappearing into the market and not going back into central banks' coffers. This was estimated by Frank Veneroso in 2002 to have totaled somewhere between 10 and 16,000 tons. Now, he said at the time that he thought that this had ended up round the necks, adorning Asian women. Some of it, I'm sure, did, but I think the bulk of it actually went into China. I reckon that by 2002, she had acquired between 20 and 25,000 tons of gold. Now, bearing in mind that ever since then, the policy has continued of not allowing any gold to go out of China. I mean, in 2014, I interviewed a director of one of the Swiss refiners, and I asked him whether he'd ever seen any Chinese refined bars, and he said no. I asked him the same question about 7 years later, and he said, well, I heard reports of a few, but we guess they were smuggled out. So you can see that nothing comes out of China. And as you rightly point out, they've accelerated their mine production. They import doré from elsewhere, I mean, particularly silver, and refine it, doesn't go out. I mean, the only part of China where there is any sort of free trade in gold is Hong Kong. But an awful lot of that, I mean, some of the gold from Hong Kong, I think, is released from China. But basically, that is more or less matched by the people on a day trip to Hong Kong, walking into the shops in Hong Kong and buying gold jewelry. And they take it back, having saved sales tax of something like 20%. So China has accumulated a hell of a lot of gold. Now, how much she's got since 2002 as a nation, I honestly don't know. But I think we could probably, from her mines and various other sources, we could probably say that it's there's another, I don't know, possibly 10,000 tons. So what we're looking at in China is we're looking at probably 30 to 35,000 tons in the hands of the government.
China's recent decline in gold imports and unchanged official reserves highlight a temporary shift in demand, yet the country continues to maintain a substantial presence in the global gold market. With domestic production rising and gold accounting for a significant portion of its foreign exchange reserves, China remains a major player in gold accumulation. As global economic conditions fluctuate, the nation's long-term strategy of securing gold reserves reinforces its commitment to diversifying and stabilizing its wealth. Given China's current gold strategy and the market fluctuations, could this signal a larger trend in the global approach to gold as a financial asset? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.